Hey, good afternoon, everyone. It is Michael. It is Wednesday afternoon, about 2:45 post-election day. Today, I want to do a new series, but also bring you up to date on some thoughts as far as the election, the impact, which some of it we're obviously seeing today, and what we see going forward. So first up, here's our agenda. Again, the election outcomes. I think it looks like we're down to just one option at this point. We're going to talk about COVID, specifically in Europe, and what we see coming forward here in the U.S., okay? And then we're going to talk about some game planning and what we did prior, and as we look forward as it pertains to the market. So the first thing is the election. Again, 2:45 here. They just called Wisconsin. So at this point, one, you had the Biden and the blue wave, which is not happening. Okay, now, number two, which is happening, it seems, is Biden. The House has stayed with the Democrats, although the Republicans picked up 5 there. Okay, but the Senate has stayed Republican, which looks to be one of the better scenarios at this point. Clearly, the market likes that. And then, of course, Trump wins and we go forward. That seems unlikely as of now. But to be determined, meaning it could be up until December with lawsuits, etc. But I'm not going to get into that mess right now. So I think the main thing is when you look at the opportunity with having Biden and a Republican Senate, at least for the long term, it's probably going to get ugly. But the short term, what we're seeing is a willingness to work together on the next stimulus package, which is why the market's moving so much today. Mitch McConnell's already came out on that and has said he's okay, including cities and municipalities. So that's what's happening short term. So let's talk about what's happening long term here in the big picture. So last week's video on the markets, I talked about the global markets taking a hit. And that continues to happen. Now, I would add a couple points to these numbers today. Obviously, across the world, we're seeing green everywhere because of what's going on. But it has been still very much a difficult market. Why? Because COVID is really spreading in the European markets. This was through Sunday, one of my research firms. This is global. You can see that chart going straight up there. Obviously not a good sign. Now, on the death front, it has leveled off. But the bottom line is, because of this rise, we are seeing both partial and total lockdowns going forward. So how did they get here? Well, this summer, they allowed everybody to go on holiday, right? Vacation. And of course, this really has helped spur the push in this. So you're seeing a big slowdown in Europe right now because of the lockdowns once again, which, as we're seeing numbers go here, I would anticipate seeing that in the U.S. markets going forward as well. Now, here's Sweden. Why do I bring them up specifically? Simply because they've done really well with COVID, but this shows their GDP, and you see it crashing. Why, if they did so well? Because the bottom line is that baby boomers is just not a U.S. thing. It's a world thing, okay? And in Sweden, they're not going out, right? They're not spending money. Just had clients in today, and they're typical of not going to restaurants, canceling vacations, etc. So this slowdown is real, okay, across the globe. And as we anticipate numbers getting worse here in the U.S., I would expect to see some of the slow growth here as well. Okay, so the next thing is, real quick, let me switch my sign here. So what now? What do we want to do now? So going into the election, I've gone between 2% to 20% cash, and I was down to 10% going into the election. Where did that come from? Well, I added to our gold position as I discussed in my video last week. Also, today there was one red early in the day, and that was one of my countries that had a partial position in, so I fully went in there. And the other thing, which I can't give 100% details here because of compliance, obviously our clients can look at your accounts, but I've been adding individual equities to those portfolios. And specifically, I would call them somewhat thematic, okay? The first thing is the stay-at-home theme. Each of those, the three of those fit into that. And I happened to add one a week ago that is in the real estate business as it pertains to the marijuana industry. Now, quite a few states approved that last night. That is up double digits today, so that has been a big winner so far. We'll see. Again, interesting, the marijuana companies are not up today, okay? And this is a different play on that, which as of now is working. So, big explosion today, so I'm sitting on that 10% cash. Let's see what happens over the next couple days. Let's see where this stimulus goes and when we actually get it. Now, again, if there's opportunity, I'm going to buy. Big day like this, only that one country was flat, maybe a little bit minus, so it was an opportunity to add to that as I think it heads higher. But that's my game plan right now. As I see those opportunities, I will add, and who knows, possibly go to full allocation or not, depending on if today is a sign of things to come or not. Now, that being said, let's give a little bit of hesitation here because I talked about the slowdown here in the U.S. That's real, okay? We're seeing that already. And also today, as well as the market is doing, the bond market is really strong today. So the bond market absolutely does not believe what's happening, okay? If the economy were strong, we would see those bond yields going up. We've had a massive move to the downside in bonds today. So once again, the bond market is screaming something different. So it is going to be an interesting couple weeks here. We'll see how it plays out. We'll keep in touch. As always, any questions, give me a call, and we'll talk to y'all soon. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.